Good morning, good afternoon, and good evening. Welcome to our 312th weekly webcast. If this is the first time you're joining us, welcome. If you've been with us before, welcome back. Now, the way this call works is this is an AMA, like you see on Reddit. You can ask me anything. You can ask me business questions, investing questions, of which I'll get a lot today, and I'll explain bonds in a lot of detail today. You can also ask me personal growth questions, startup questions, any questions you want to. And my humble goal is to help you take your career to the next level. Now, before we get started, I want to talk a little bit about what happened with Donald Trump yesterday. So what he did was he put a pause on many tariffs for about 90 days. Why did he do it? Was it because the market was selling off? Partially, but there's a bigger reason. And that was because there's a crisis of confidence in the US dollar and US bonds as well. And so what pushed Trump over the edge in terms of putting a pause on tariffs temporarily is the fact that China and Japan were selling U.S. treasuries, meaning U.S. government debt. Now, let me explain how this works. The United States government has $36 trillion in debt. Okay, and the largest owner of America's debt is actually Japan. They own $1 trillion out of the $36 trillion of debt. That's 2.7%. And China is the second largest owner of U.S. debt. They own $750 billion. So $750 billion divided by $36 trillion in debt is about 2%. A lot of people think the Chinese government owns a lot more debt than they do. They actually don't. Number three is United Kingdom, and then the rest is well under 1%. So what happened was this, and this is how this impacts you and me and the entire world. So what they did, the Chinese government, the Japanese government, is they started to sell bonds, okay, U.S. treasuries that looked like this. And what happened was, when you sell bonds in size, bond price goes down. It's like everybody's selling a stock, right? So the bond price goes down. Now, there's an inverse relationship, and this is crucial to understand. There's an inverse relationship between bond prices and yields. What does that mean? Well, if, and this is what happened yesterday, if the Chinese government and the Japanese government sell bonds, it pushes interest rates up. Why is that the case? And why is that terrifying for America? Well, the reason it works like that is, let's pretend that this is a $1,000 bond, okay? And it's United States Treasury debt. And it pays you $50 a year, okay? So $50 divided by $1,000 is a 5% yield, okay? Now, the $50 stays as is. Now, if China and Japan sell lots of bonds, which they did, what happens is it pushes the value down. So hypothetically speaking, if the value of the bond went from $1,000 down to $900, the $50 stays the same. So $50 divided by $900 is not 5%, it's 5.56%. And that means that interest rates go up for Americans. It makes everything more expensive, and it's a big deal. It's a big deal because what Trump wants to do is he wants the Treasury Secretary to actually, or the Federal Reserve to actually cut rates. But he can't cut rates if big countries like Japan and China are actually selling bonds, pushing yields up. Okay, it's crucial to understand that. Yeah. All right, let me move on to your questions. And if you have follow-ups, by all means, let me know. All right. And then Ray wrote, I can't understand if I should own bonds at all. Yeah, it's a great question. Yeah. So I think everybody should have part of their portfolio in bonds. Okay. So the way you calculate what percent of your portfolio should be in lower risk bonds, like United States treasuries like this, for example, is you take the number 100 minus your age. So if you're 80 years old, you don't have that much time left. But 100 minus 80 is 20. And that means 20% of your portfolio should be in growthier stocks, like some risky stuff, and 80% should be in lower risk investments, like higher dividend yielding stocks in the Dow 30 components, as well as value stocks and also bonds. Because the very last company on the planet to go bankrupt would be the US government. It's all relative. Conversely, if you're 25 years old, 100 minus 25 is 75. That means 75% of your investment portfolio can be in slightly riskier stocks and 25% in lower risk investments like value stocks or high dividend yielding stocks that are Dow 30 components, and bonds as well, because you have many more years to make up for this. So I hope that explains the question, your question in more detail. One more caveat I'll say is it's easier to buy U.S. government bonds in your portfolio. It's safer, I should say, if you live in the United States. And I say that because if you live in the United States, you live and die by the U.S. dollar. If you do it and you live in another country, you could have massive currency fluctuations, which could impact the value of this in your portfolio. Yeah. All right, next question is, how do you know when the dip is the deepest? How do you optimize buying these days? Yeah, very simple answer for you. So what I look at very closely is something called the VIX, and I explain this very, very quickly, okay? Now, there's been 3 once-in-a-lifetime buying events in our lives, okay, that forced the VIX to go up. Number 1, the financial crisis of 2008 when we were within 24 hours of bank machines not working. Number 2, the COVID crisis in Q1 of 2020 when everybody was selling everything to the extent that the futures price of oil went to negative $30. I can talk about why if you want me to. And number 3, or threeth, as my son Andrew used to say, the current black swan event, what's happening right now. So right now with the tariffs, nobody could have forecasted this. Now, we knew that Donald Trump was going to raise tariffs on the campaign trail he talked about, especially last summer. But we didn't know that he was going to put tariffs on every single country and calculate tariffs in a questionable way. So what he did when he first announced his across-the-board tariffs, which is a black swan event, we couldn't forecast this. And he held up that chart, remember, of all the countries and numbers. What he did was it wasn't really reciprocal tariffs, meaning this country tariffs us, America, 20%, therefore we do 10% or 20%, whatever it is. It was a trade imbalance. And so the way he calculated it was he basically said, how much do we export to a country and how much do we import? Well, America imports way, way more from most countries, and he calls that a tariff, which is technically not correct. Okay, now let me show you the best buying opportunity, when to buy stocks, and I put my reputation on the line in this, okay? All right, and always do your own research, please. All right, so every chart tells a story, and I'm going to briefly explain what the VIX is, okay? So whenever you have volatility in the markets, you have fear, okay? So the VIX was created back in 1990 by the Chicago Board of Exchange, CBOE up here. And what the VIX does is it tells you how much volatility the market is expecting in the next 30 days or so by looking at options, meaning call options, puts, etc., options volume, and expectations on the S&P 500 for the next 30 days. So a low number here, okay, just look at this blue line here. A low number here means very little fear, right? There's less volatility. A high number means a lot of fear. And so the number I always look for is 70. No matter what happens, if the VIX rises above 70, it's up a bunch today, only because the markets are down today. A lot, actually, a couple percent. So if it's above 70, no matter what happens, you buy. Okay, and I don't care if it feels like it's the end of the world. Things are never as bad as you think. That is when you buy. So let me give you 3 data points here. So right here in the fall of 2008, when we were within 24 hours of bank machines not working, you can't see it here, but intraday, the VIX went above 70. You buy no matter what. And Warren Buffett backed up the truck and bought tons of shares at that point in the fall of 2008, including Goldman Sachs preferred shares. He got a sweetheart of a deal. Then right here in Q1 of 2020, you can't see it, but the VIX actually spiked intraday above 80. And everybody was selling everything, and that's when I buy, no matter what. Right here, the VIX, it got intraday to, it touched 60 on Monday morning of this week. If you're listening to the replay or podcast, today's date is Thursday, April 10th. Okay, so intraday, it actually reached up to, you can't see it here, but it actually touched 60. Okay, so I'm starting to slowly buy when it happens, but when it goes to 70, I personally go all in. And when I say all in, I'm not saying I'm fiscally irresponsible. I have a fiduciary duty to my family. I buy quality stocks that I know are going to be much, much higher in 5 years. In fact, before I invest in a stock, I do due diligence, obviously, but I always ask myself, in 5 years, is this company more relevant or less relevant than it is today? And that stops me from getting seduced from buying value or stocks that are value traps or cheap for a reason. Now, I want to talk very quickly, and I'll tie this into stocks, about Wayne Gretzky. So Alex Ovechkin, what he did was he broke Wayne Gretzky's goal-scoring record, right? And Gretzky's great. I love him, and I'm a very proud Canadian. So the reason Gretzky is very successful, okay, and this will tie into stocks, is because he never skated to where the puck is. He skated to where the puck is going to be. And I want you all to have the same foresight. What does that mean? Well, I want you to invest in stocks that people are going to like. And you've got to be a contrarian always. As Warren Buffett said, be greedy when others are fearful, and fearful when others are greedy. So do your investment research. Start buying your favorite stocks if and when the VIX spikes to 70 or your favorite stocks decline a lot. And ask yourself a basic question in 5 years again. Is this company in the sector it's in going to be more relevant or less relevant than it is today? Now, I recommend buy and hold, okay? And I add to my positions aggressively when the market declines because nobody else does. So Warren Buffett, when he bought Coca-Cola around 1990, he still owns it today. And when he buys any stock, he always tells himself this. I'm assuming that the market's going to be closed for 10 years. Now, obviously, he knows the market's not going to be closed for 10 years. But that's how long-term focused he is, and I want you to be the same way. In fact, Mr. Buffett said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. It's ludicrous to sell stuff you love because it goes down. Doesn't make any sense at all. I want you to be extraordinarily long-term focused. And we've all made the cardinal sin of selling stocks we love because they went down. And then we look back at the chart 10 years later or 5 years later, and it's much, much higher. Don't panic sell. Okay, be in this for the long term. Okay, use this as an opportunity, if you see the VIX above 70, to buy your favorite growth stocks longer term. And if you don't have cash to do it, then you can consider selling some of your bonds, so to speak, your lower risk assets, and deploying it into stocks if and when the VIX spikes above 70 or your favorite stock gets murdered. Yeah. Okay. And the way you know that a stock has found its floor, meaning it won't go down anymore, any single stock for the most part, is if multiple negative news releases come out and that particular stock does not go down. That means you've exhausted, you've capitulated, all the renters of the stock are gone. By the same token, if you own a growth stock and it's got a cure for cancer, it's an amazing company. And if it doesn't go up on multiple positive data points, then all that positive news is priced in. But I want you to think very, very long term, please, whenever you invest. And I always tell my students to look for 5x5s, meaning stocks that are going to go up 500% within 5 years. Okay, and usually you can look at mid caps for that. Now, in order to do that, what you have to do, and quite often I'm wrong, but if I'm right even a little bit about a stock that's not a 5x5 and it's up a couple of 100%, I'm happy. The way you do that is you do deep investment research, okay? And this is one of the many templates I provide my MBA students and my corporate clients. So what you do is, and I designed this based on my work experience working at Goldman, top hedge funds, venture capital, etc. What you do is there's 100 steps to do investment research. There's qualitative investment research, quantitative, and financial. Okay, you start with the management team, you answer 800 questions here, and then what comes out of this is a one-page write-up, right? This is dummy data that you can bring to your interviews, as well as a 100-page due diligence report, as well as a dashboard. Now, the most important thing about doing your own research on stocks, don't listen to me on what stocks to buy. Don't listen to anybody on television like Jim Cramer, who's always wrong. Don't listen to any portfolio manager or CEO you see on television. Do your own work because nobody is smarter than you. And I give you all the tools to do it. The most important thing you can do, though, is forecast the financial statements in order to come up with a target price for your company in 5 years. I can go into this in more detail if you want me to as well. And if you do the research yourself, then you're not going to panic sell. And if you don't have time to do research, just buy ETFs. Yeah. So when I don't have time to do investment research, I'll tell you what I buy. And please do your own research first. I buy the Qs, right? That's the tech stocks within the NASDAQ. And I buy ticker VOO, which is the S&P 500, which I think is the best investment, one of the best investments you can make in the very, very long run. I promise you, the S&P 500 is going to be materially higher in 20 years. Materially higher. And I think the average return of the S&P 500 over the next 20 years is going to be at least 15%. I think we're going to a super cycle because of AI. What does AI do? Why is this important? Well, what AI does, this is an income statement. What AI does is it ensures that all expense items, sales and marketing, R&D, and G&A, are much, much lower. And so if revenue grows or even stays flat, it all drops to the bottom line. That's one of the many reasons I'm very bullish longer term. Always think long term. The longer the view, the wiser the intention. Okay. Okay, next question is, and by the way, you can also look at technicals. Now, I always mention look at fundamentals first, valuation second, and technicals a distant third. But if your favorite stock, after you've done your fundamental research and valuation research, if your favorite stock from a technical perspective has an RSI, meaning relative strength index, of 20, start buying. Things are never as bad as you think. Yeah. Okay. All right. And the best investors I've ever worked for, a lot of billionaires, they're highly unemotional. They don't get too happy when the market goes up. And when the market goes down, they stay like that emoji with a straight smile like this. Just be unemotional, please, about stocks. Yeah. All right. All right. Next question is, how do you decide for a growing company that's still losing money when to decrease R&D for the model? Okay, let me pull this up. Okay, so your question is this. For a growing company, meaning revenue is growing very, very fast, this is an income statement. How do you decide, and they're losing money, when to forecast a decrease in R&D and other expenses, meaning these two here? Okay. Do you just follow the trend? What if expenses are flat? Yeah, it's a great question. Okay. So whenever you create a financial model, and modeling is so much easier than you think. And what financial modeling basically means is figuring out what net income and cash flow is going to be in the long run. Why is that important? Because if you can forecast in a financial model, and I provide you all the templates you need for that, if you can forecast what the earnings are going to be in a financial model in 5 or 10 years, then you can figure out what the value of that company is going to be in 5 or 10 years. Never look at this year's PE, last year, or next year's. Always think long term. Okay? This is how the best money managers do it, including the best hedge funds as well. They're not day traders. So the way to forecast a model is I want you to spend most of your time forecasting revenue. Okay? Almost all of your time on revenue. Because most other items here, which I'll get back to in a second, become a percent of revenue. How do you do that? Well, you look at historical trends. You build out the financial statements for the past 20 years if you can get the data. Okay? Look at trends. It's a lot easier than you think. Listen to earnings calls as well. Read the 8K, the 10K, the 10Q, the S1 if it recently went public as well. And put lots of comments in your mouth. So I'm going to make this simplistic. So if I told you, and let me go to my other camera here. This will be fun. Okay. So if I told you that a company's revenue over the past 10 years was like this, what do you think the next year is going to be? Probably here. And if I told you that a company's revenue growth was decelerating, okay? What do you think the next year is going to be? Probably lower. An object in motion will stay in motion, okay? Just remember that. And then when you look at historical revenue, you also have to account for if there's a big bump one year, if revenue went up a lot, you have to go to the financial statements and figure out why. They might have bought a company, right? So they have a nice step up in growth. But you can't keep forecasting that because you're not going to buy a company every year. Now, once you forecasted revenue and you feel confident with your estimates for revenue, okay, spend most of your time on revenue. Then what you're going to do is, for the most part, the rest of the income statement, these items here are just going to be a percent of revenue. Most of these items, okay? Meaning these red bricks here. And so if you see, for example, that R&D, research and development, as a percent of revenue when you're creating your financial forecast. If you see that R&D as a percent of revenue is growing slower than revenue is, then model a slower next year. Let me explain what that means. So if revenue growth is 10% every year, and if this as a percent of revenue goes from 15% to 14 or 13 to 12 over the past 5 years, you can model a higher growth rate in revenue and slower growth rates in R&D, okay? And that will drop right to the bottom line. Now, in terms of when do companies decide to cut R&D? Well, if it's a growth company, they're not going to do that, okay? They're going to keep investing in R&D. If it's a company that's in trouble and cannot innovate anymore and growth investors don't want to touch it, then an activist investor like Carl Icahn might step in, buy a big part of the company, and force the management team to cut expenses in terms of R&D, et cetera. I give you all the tools so you can create financial models that are at least as good as those professionals on Wall Street. Yeah, always use your brain. I say it with love in my heart. All right. Next question is, you say if a company is growing 20% per year, you should pay 20 times earnings. Yes. Okay. And then you got to follow up. I'll get to the follow-up in a second. So in terms of how to value a company. Okay. And one more thing I want to say for the finance purists out there. Okay. When I talked about forecasting a financial statement, we assume that in the long run, net income and cash flow converge. Okay. So your question is 20% growth per year. Why do you pay 20 times? Yeah. So the way it works, and I'm going to oversimplify this before I get to this financial model and teach you how to value companies. The way it works is, historically speaking, and these are very rough numbers, the S&P 500 trades at 15 times earnings. And historically, the S&P 500 has earnings growth of about 15%. So 15 times divided by 15% means a price earnings to growth rate of 1. Remember that number. So if there's a company in the S&P 500 that has earnings growing at 20%, it probably won't trade at 15 times earnings. It'll trade at 20 times earnings, or it should. Conversely, if a company in the S&P 500 has earnings growth of 11%, it probably won't trade at 15 times earnings. It'll trade at 11 times earnings. And I'm really oversimplifying this for a reason. Okay, and we'll come to the aha moment in a second. So I don't want you to look at the PE for this year or next year, ever, or last year, God forbid. I want you to create your own financial model, and I want you to value the company based on your earnings estimates in 5 years. I promise you this will make you money in the long run if you just listen to this, okay? It'll stop you from being a day trader. Day trading does not work because we can't name a single successful day trader. So how do I value a company? Well, there's various methodologies. The easiest one, and the best one by far, is to forecast earnings. Okay, so you forecast revenue, all these expense items, and eventually what you're going to do is you're going to have net income. Okay, earnings, same thing. Profit, same thing. And they call this the bottom line because it's the bottom of the income statement, and revenue is the top line because it's the top line of the income statement. Never memorize stuff, understand it. All right, so we're forecasting our financial model. And in year 5, okay, in year 5, we have earnings of $1. And between years 4 and 5, we've got earnings growth of 20%. So that means that in 5 years, this stock should trade at 20 times $1, the same as the growth rate. Okay, and that's your target price in 5 years. If you don't see material upside in your target price in 5 years, don't invest. And from a risk management perspective, and this is really important nowadays with the markets declining a lot, a couple things. Don't ever invest in illiquid stocks, meaning stocks that don't trade very much, because illiquid stocks own you in a down market rather than vice versa. Don't ever buy more than 10% of the average daily trading volume on any stock. Otherwise, you're a stockholder you can't get out. Another thing to keep in mind from a risk management perspective is I want you to make sure that you never have more than 5% of your portfolio in any one particular stock, okay? Unless you're doing ETFs. Also, I don't want you to have more than 20% of your portfolio in any one particular sector. For example, technology, retail, industrial, cyclicals, commodities, etc. And for those of you overseas, don't be too exposed to the US dollar either. Okay. All right. And then you asked me also, okay, Shopify, you wrote, is growing revenue 25% year over year, 15% earnings, trades at 65 PE. Yeah. Yeah, I don't care about earnings growth this year on Shopify or any company. I care about earnings growth years from now, 5 or 10 years. So in terms of showing you how that works, I'll do this very quickly. Okay. So what you can do is you forecast, after you answer all these qualitative questions here, okay, you forecast revenue, okay, then you forecast the income statement. Then what you do is you're going to value the company based on your earnings estimates in 5 years. Okay, so if EPS growth in 5 or 6 years is this, then perhaps you can put that multiple on it as well. And this is just dummy data here. Okay, but you have to forecast your entire income statement. Okay, let me get back to more questions. And if anybody has follow-ups to anything I've answered about, by all means, please let me know. And thank you. Okay. And I've got my window open here. My air conditioner is broken. So I've got my door open here. So if you guys hear the lawnmower in the background, please let me know. Let me close this here. All right. I've got the air conditioning dude come to fix it this morning. All right, next question I've got here is, if I have $1.5 million, should I rent out my house for $2,500 per month and invest the rest at 12% annually for 50 years? Or should I buy the house outright? Which option? Yeah, so what I recommend doing, and speaking of this camera angle here, what I did when I first moved into this house, right? I bought more house than I could afford. What I did was this room here, we rented out to Airbnb, and that covered the mortgage. We actually rented out 2 rooms, and I built another door as well. And now that I run my own company, my company rents this room from me, from my wife and I. Yeah. But yeah, whenever you're looking to buy a house, what I recommend doing for everybody is make sure that you can get a room to rent out if you can that's secure. And I built an external door for this, which pays off really quick. Make sure you can rent out to Airbnb. It's a cash flow machine. Okay. And never put down more than 20% as well. Now, to learn more about how to value any piece of property you want to buy, I also have a model for this. Okay. It's part of my programs. Anybody signs up for my program gets this for free. So before ever investing in real estate, and I recommend your first investment should be your primary real estate investment. Then what you can do is you can buy residential rentals, commercial rentals, and rent them out. But I ask you tons and tons of questions, and this works in every single country, okay, in terms of the ideal real estate investment, okay, how to value property using 5 different valuation methodologies, mortgages, income statement, balance sheet, formulas, etc. And all this spits out into a 1-page write-up, okay? And then also a 27-page business plan for you. Now, failing to plan is plan to fail. Before you invest in any stock and before you start a company and before you buy any piece of real estate, you have to write a full business plan first. This is what it looks like when you spit it out. I promise you this will help you preserve capital and make much, much more in the long run. But try to look, whenever you're looking to buy a house, try to see if you can rent it out. Like do a search on local regulations, see if you can rent it out over Airbnb. I promise you that will help you cash flow wise materially in the long run. Yeah, I wouldn't buy the house outright. I would let the mortgage be covered by the renters. Yeah, because you do get a tax savings. Now, in the United States, you can deduct, I think it's up to $750,000 in terms of interest on your mortgage, right? And that's why Americans have massive mortgages and the rest of the world does not. So in Canada, for example, in around 1980, when interest rates were about 20%, it was crazy. I remember my dad, he just started a business. He did very well, but it was really hard to make the payments, right? So you got to look closely at interest rates as well. And that's why what China did, as I mentioned at the beginning of this call, in terms of dumping, meaning selling treasuries and pushing up interest rates on the 10-year, is deadly for everybody. Yeah, always pay attention to interest rates. I can talk about that in more detail if you want me to. All right, next question is, which option would be more financially beneficial and why? ChatGPT says renting and investing. Why do you have another opinion? Yeah, ChatGPT is wrong. Don't rent a house, okay? Buy a house, that's how we say it in Canada, or an apartment. And it's hard to buy your first place. Like I had to wait until my 30s before I can buy my first place. I lived in New York City, bought on the Upper East Side. But the beautiful thing about buying a place is you're going to save a fortune because you're not wasting money on rent. Also, you get the appreciation and you can write off the interest if you're in America. Now, buying investment properties is even better because you can depreciate it. Now, back in 2016, I don't know if you guys remember, but during the first televised debate between Hillary Clinton and Donald Trump, Hillary Clinton criticized Mr. Trump for not paying much in taxes. And, he's very forthcoming. He basically said, of course I don't, because I get to depreciate. So if you own real estate, and the richest people in America and globally, the most wealthy people, I should say, they own a ton of real estate because what you can do is you can write off the depreciation. That's a huge tax break, a huge tax break. So if ChatGPT tells you to rent instead of buy, I say they're wrong. And let me prove it to you. Okay. So let's say that you spend $2,500 a month on rent. Okay. That's money you're flushing down the toilet, eh? And let's say you do it over 50 years. So that means over 50 years, you're going to spend $2,500 a month times 50. Yeah, times 12. Okay, here we go. So that means that you're spending $1.5 million in rent over 50 years. Now, if you didn't spend that money on rent and your house appreciated by this much every year, which is extreme, I know. Do you know what this money is worth if you invest $1.5 million, meaning $2,500 per month over 50 years at 12% return? Take a guess. It's $97 million. Unbelievable. Please don't rent. Okay? Don't listen to ChatGPT. ChatGPT is quite often confidently wrong. It hallucinates. And if you ever do investment research or any research at all on ChatGPT, I always want you to have a follow-up prompt saying, show me the source and the link to the website where you got this information from. Yeah. All right. Next question is, what brand of food containers do you use for smoothies freezing? Yeah. Well, I put it in the fridge. What I do is every single Sunday, from a biohack perspective, I create 7 containers of greatest hits of stuff that I juice, et cetera, and all the stuff is juiced. But I use a blender bottle. Let me show you here. Yeah. So this is the one I use right here, blender bottle. Yeah. All right, next question I've got here is, Peter wrote, hey, Chris, hey. Do you think imports made by penguins should have import taxes levied on them? What's your take on this week's tariffs fiasco? Yeah. So what Peter is referring to is the McDonald's Islands, which are close to Antarctica, where nobody lives there except for penguins, and Trump threw tariffs on that country. So Trump threw tariffs on every single country. I'm going to try to be objective here. Okay. Now, as a proud Canadian living in the United States, I was hurt by what Trump did to Canada. Okay, and Canada was the first country that pushed back, and obviously a lot of other countries are pushing back right now. But let me be intellectually honest and tell you why Trump is doing this. So I remember when I was a kid, and you can Google this, you can watch this on YouTube. Donald Trump was on the Oprah Winfrey Show, and this is in the 1980s. And he said back then, as he's saying now, our country, America, is being ripped off because all these other countries charge massive tariffs on America, and America only charges tariffs of a minimal amount, sometimes only 2% for some countries. And so what Trump is trying to do is he's trying to re-level the playing field and decrease our debt. Okay, so behind the scenes, what Trump is trying to do is to increase revenues for the country, okay, through tariffs, and cut expenses for the country as well through Doge. Now, right now, the United States government has a $36 trillion deficit. That's not sustainable at all. And one of the big reasons for that is not just overspending overseas on military stuff and all that stuff to protect the country, which is fine. One of the reasons is because of massive trade deficits with other countries. And at some point, I don't know when, but at some point this is going to matter, and the United States will not be able to pay back its debt or even the interest on its debt. So I think it's smart to try to figure out this debt situation as fast as possible. But levying massive tariffs, 125% on China, I think it's overdone. I think it should be a step-based function where it's 5% more per year. But whenever Trump does something like this, we have to understand that, love him or hate him, he gets a deal done. Now, most people, when they're negotiating, party A says, I want this, party B says, I want this, they meet right here. With Trump, it's a bit different, a lot different. Party A says, I want this, Trump says, I want this, you can't even see it, and they end up meeting here. So he can get a deal done. He can. Has he gone a bit too far? I think so. Why did he blink? He blinked and paused tariffs for 90 days because, again, what China and Japan did with respect to selling treasuries, which I talked about at the beginning of today's webcast. Yeah. So it's a negotiating tactic. Now, according to the Treasury Secretary and other government officials in the United States, about 70 countries have reached out to United States government departments and said, hey, can we renegotiate? That's a good sign. But the precedent of what Trump is doing with China is dangerous. Now, the United States put on 125% tariffs on China. Okay, and China is fighting back, right? They say that Chinese communists are the best capitalists. It doesn't matter if Trump makes tariffs 1,000% on China tomorrow, and I'll tell you why. Because until a deal gets done, all imports and exports from China to the United States are on hold. And I think Vietnam is a great country to invest in after you do your research. Because I think what China's going to try to do as a backdoor solution is to start making stuff in Vietnam and then shipping it to the United States. Now, I'm not sure if you saw this, but a couple of days ago, Apple rented a couple of airplanes and put thousands and thousands and thousands of iPhones in the airplanes to ship to the United States as quickly as possible. Now, I'm not an advocate of trade wars at all. I think it's going to be highly disruptive to the global economy. You know, some of the pundits and skeptics out there are saying that the age of globalization is done. It's not. But there is a crisis of confidence in the United States right now, to the extent that, again, countries are selling treasuries and the US dollar is going down at the same time, which is illogical. Yeah. Okay. Next question from Boss SMG. Hey, how are you? Wrote, hey, Chris, how are you? Good. What's your take on the market these past few days? I'm following your lessons from the MBA, and I'm going for a 5-bagger. Yeah, 5x5. Your MBA helped me become more confident. Thank you. Awesome. Thank you. Yeah. So I don't know the path, but I know the direction of the markets and my favorite stocks in the long run. It's much higher. Don't panic sell, please. Don't panic sell. And you can't, and day trading doesn't work. And I have a lot of students of mine that are day traders, and I convince them not to be. You will lose your shirt. I'm going to get down on my knees for this because I really do care about my students. Okay? All of you, even if you're not a paying student, I don't care. Don't day trade. You will lose everything. There's a reason why you can't name a single successful day trader who's been successful in the long run, because they don't exist. Why is that? Because you can't forecast near-term political events. You could not have forecasted that Trump was going to put massive tariffs on China. You couldn't have forecasted, meaning when I say you, I'm talking to day traders. I say with love in my heart. You couldn't have forecasted that Trump would have put a 90-day pause on certain tariffs. You couldn't have forecasted black swan events like 9/11. You could not have forecasted COVID. You could not have forecasted many things. You could not have forecasted the unwinding of the yen carry trade last summer, which made a lot of day traders go bankrupt. Just be very, very, very long-term focused. Always. Please, I don't know the path, but I know the destination. You'll sleep better at night that way as well. I promise you. Yeah. Okay, moving on to Alex, who wrote, hi, Chris. With politics aside, can you discuss the current administration is truly trying to achieve through tariffs? I'm trying to focus on fundamental issues the U.S. needs to address. Thanks. Yeah. Yeah, it's basically Trump is trying to get a deal done. That's all. That's it. Yeah, that's all it is. Yeah, it's a negotiation. Okay. And I don't think that a year from now that most of these tariffs are going to be as high as we expect them to be. It's a negotiation. Yeah. What does concern me, though, is China being stubborn. And I understand from their perspective, you know, they have to save face and show themselves as being strong against who they call a bully. What worries me is this. What worries me is geopolitical things. Like if the United States puts massive tariffs on China, well, China might just say, screw it, we're gonna think about maybe bringing in Taiwan to part of our country now, because we've already got massive tariffs on us. What else are they going to do? That worries me. I pray for peace always. And when we had massive tariffs back in the 1930s, that actually led to World War II. Yeah, I just want peace, and I pray for peace. Yeah. And one thing I don't think is cool, what the U.S. government is doing right now, okay, I'll tell it like it is so 25% of all student visas to the United States is for people from China. And a lot of those students from China have just gotten their visas canceled. Okay, that's not cool. You know, this has nothing to do with Chinese students. This has to do with a policy decision between two superpowers, China and the United States. Yeah. And please understand, for those of you that that are American and are hurt by the fact that Canadians boo the national anthem, American national anthem. Canadians are not booing. Canadians love Americans. They're booing the policy of Trump. That's it. Yeah. Okay. Next question is: I'm going to an event for software developers. I looked at the profile page to see what they wear. Do you have any additional tips? Thank you. Yeah. So whenever you go to an informational meeting, interview, etc., or conference, if you're not sure what to wear, go to the website of the company to see what they're wearing. Also go to the LinkedIn profile to see what they're wearing as well. If you can find the names of 10 or 15 people you think will be there, what I want you to do is this. I want you to thoroughly research them on LinkedIn. I also want you to go to their X profile and Insta profile and see who they follow so you can spark up a conversation. You know, for example, if they follow, I'll do a baseball analogy. If they follow a lot of, and do this for your informational meetings too, if they follow baseball players or baseball teams, you know what to talk about. You always want to bond before business. Relationships are more important than product knowledge. Okay, your network is your net worth. Never jump into any business meeting with a person you've seen for the first time ever and talk business. Bond before business. This works, I promise you. Yeah. Okay. Yeah, and Alex said, if these issues continue, sooner or later the dollar may not hold its status. Yes, there is a crisis of confidence right now, and there's a big concern that the U.S. dollar will decline materially in value while interest rates go up. I know that's out there. It doesn't make any sense, but that's what's happening and could happen. That's why Trump blinked yesterday to put a pause on tariffs. Yeah, there is a crisis of confidence with respect to international companies and international governments thinking about trade with the United States. I think this crisis of confidence will last for 3.5 years until Trump is no longer president. Yeah, we live in interesting times. All right. Ooh, lots of questions today. All right, next question is here. Give me a second. How do you analyze the yield curve and draw conclusions from the analysis? Can you explain in detail? Absolutely. So let me explain a couple things first of all. Let me explain how interest rates work, and I'll do this very, very quickly. Okay. So I'm the United States government, okay? And you're all banks or investors or the Chinese government or international governments. I sell you bonds, okay? Treasuries, my debt, okay? In return, what you do, you take this, right, and you give me your money. Then what I do is I take that money, part of it, and I put it out of circulation. And whenever the supply of anything goes down, the price goes up. So that's what makes interest rates go up and down. Now, what's deadly about what's happening right now with respect to Japan and China not buying U.S. debt or selling U.S. debt right now is if international countries refuse to buy U.S. treasuries, like I just showed you, U.S. debt, then the U.S. is screwed. And this right here, and we need to issue bonds and debt in order to pay for stuff. So this right here is an actual United States government bond from World War II, 1944. The use of proceeds was to pay for tanks and guns and stuff. Imagine if international investors no longer buy bonds for the United States. It's deadly. The United States can't fund growth, and they could go bankrupt. I don't think that will happen because I think the last company on the planet to ever go bankrupt will be the United States. Yeah. All right. Now, in terms of the yield curve, so what I'm about to explain impacts all of you materially. Okay? Because the way the interest rates work is if interest rates go up, everything is more expensive for you, obviously, especially buying a house. So this is all determined by what's called the yield curve. And I'm going to explain the yield curve in 60 seconds. All right. So the yield curve tells us what interest rates are and are going to be. And the way you can do this with me, okay, and this is our Treasury Secretary, Besant here. The way you can figure out what interest rates are and will be is you go to treasury.gov. Then you go to data, and then you select yield curve, okay? Then what you do is you select the time period. So the current month, and I click here on apply. Now, right here, we see what interest rates are. Okay, now, the United States government sets short-term interest rates, okay, by buying treasuries and selling treasuries. Okay, so right now, short-term rates are, 4.4%, et cetera. Long-term rate is set by the market. The market sets a 30-year, and this impacts you. And this is a healthy yield curve. A healthy yield curve means long-term rates are higher than short-term rates. Why is that healthy? Because it basically tells you that, well, in the long run, interest rates are going to be higher. Therefore, the government is going to, it means the economy is going to be good. So the government's going to raise interest rates to cut inflation. That's a healthy yield curve rather than an inverted yield curve we had under Joe Biden when there was real crisis of confidence. So the market decides this. That's it. That's the yield curve right here. Okay. And it's important to monitor that because the 30-year, which I just showed you, which is about 4.72%, the 30-year impacts what your mortgage is going to be. If the 30-year on the United States debt, per the yield curve I just showed you, goes up 4%, which is, it wouldn't happen overnight, obviously, to 8 or 9%, then that means your mortgage, your 30-year fixed or variable mortgage will go up by 4% as well. All right. Next question is, what conference do you attend to keep yourself updated? I don't. I used to go to tons of conferences all over the world for software, cloud computing stuff I used to invest in. I don't go anymore. The way I get my research is I do my own research. I listen to earnings calls. And I also do this every single morning. Please do this. This is how you get ready for the business day so you can talk finance and stuff. And I did this in the shower this morning. Alexa, Wall Street Journal News.
From the Wall Street Journal.
Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but
Okay, Ryan. Yeah, but it goes on for 5 minutes or 10 minutes sometimes, telling you all the highlights as you're getting ready in the morning so you can work smarter and not harder. Yeah. All right, next up, Phil. Hey, Phil, how are you, man? Phil, Germany, is my first student to write a book. He wrote years ago using my book template. I can give you all the template today if you want to as well. So Phil wrote, I created a business plan, not for investors, but as a guide for myself. Now that I'm finished, what should be my next steps? Yeah, the way that you have a business idea that has a good probability of making it is if you finish a business plan. Please, everybody in this call, do not ever start a company without writing a business plan first. And if you're frustrated at work, anybody on this call, because you're being mistreated, I say this with love in my heart, good. Because frustration leads to breakthroughs. It leads to you reinventing yourself. As The Rock said, when you got your back against the wall, there's only one way to move, which is forward. If you're frustrated at work, I want you to all write a business plan. And I have a template for that too. I have a template for everything. Yeah, for my students. So what you're going to do, Phil. So Phil completed the Venture Capital Bootcamp. So this here is my business plan template you guys can complete. I ask you 700 or 800 questions. And if you complete this, then you probably have a business model that has a decent chance of making it. So what comes out of this is not only a massive business plan, but also presentation slides. So now that you've completed your business plan, which is right here, Phil, I want you to click right here and export your presentation slides so you can go and raise capital. Now, I've humbly raised and managed over $1 billion in my career. You can use my methodology to raise capital. I think it works very well because I've made every mistake there possibly is. Whenever you start a business, do not get a bank loan because banks are chicken. You miss one payment, they'll take everything. I want you to get money from high net worth investors initially and eventually venture capitalists. The reason I say high net worth investors is because the sales cycle is quite short. It can be 2 weeks or so. People will invest in your company if you use my networking methodology I teach in my programs. You don't have to give up your entire company, right? So, meaning voting rights. So we do a case study in my MBA program on Meta, which is called Facebook, in 2012 when they went public, and I was an investor in this in my venture capital fund. But when they went public, on the very cover of the S1 document here, Mark Zuckerberg wrote, the investment wankers wrote, that Zuck will own well over 50% of the voting rights. right? So even though he owns way under 50% of the shares, he still has voting control in the company. Larry and Sergey did that with Google as well. Phil, because you're in my MBA degree program today at 10 a.m. Pacific time and every single Thursday forever, there is a Zoom call, a 3-hour Zoom call that you can join. And I'm happy to read through your business plan as well. Thank you. Moving on to Shavance, who wrote, I will put a yo and run away. Bye, don't have time. Oh, good morning. Hope you'll come to India someday. I will. Thanks. Okay. And India is about to become the United States' #1 trading partner. They're already reallocating production of iPhones from China to India. India is the biggest democracy in the world. And I'm a fan. I despise communism. Okay. Iomid, first time I see you on the call. Hope you join us again. Wrote, hey, Chris, I have a startup and we're looking at getting funded. What are your thoughts on having a venture capital firm or possibly bootstrapping it? Bootstrapping it means paying for yourself. Okay. We are pre-revenue, but we have an MVP and onboarding customers, ATM, which means at the moment. Yeah. So what I would say is this. I would approach high net worth investors. And if you sign up, and you can always look at the description of this video and set up a call with myself and my team and talk about my programs. But what I would do is after you've written the business plan and your presentation slides, I would go to high net worth investors, not VC firms. Because with high net worth investors, again, the sales cycle is quite short. If you're just starting a company, going to venture capital firms is too early. And you're hurting yourself if you do that. Because if you go to venture capital firms to talk about your business model, and you will get meetings if you use my methodology, but if you go to VC firms to talk about your business model, and you're not ready, and it's too early, they're just going to have a bad first impression of you. And they all talk to each other as well. Did you see so-and-so's company I did? What do you think? I don't know. It doesn't make sense. That sort of thing. Yeah. All right. And you don't have to have a product, by the way, to raise money. So I remember many years ago when I worked in venture capital, we partnered with Kleiner Perkins, great venture capital firm, on a deal. And when I was there, I got to meet with a guy named Randy Komisar. He's a general partner at Kleiner Perkins, and he was the investor from Kleiner Perkins in Nest. And Nest was purchased by Google for a couple $1 billion. And I met with Randy. I said, Randy, how did you know? How good was the Nest product, the thermostat product, when you first met with the company? And he said, well, Chris, they didn't have a product. I was like, well, what do you mean they didn't have a product? He said, they had a block of wood. And they explained how the product might work. So it was pre-product. I said, well, why did you invest? He said, because I love the management team. And the secret is this. If you can sell, and I can teach you how to sell, high net worth investors and venture capital firms will invest in you more so than if you have a good idea. So sophisticated investors, for the most part, it is what it is. They'd rather invest in an A management team with a B business model instead of investing in a B management team with an A business model. Yeah. Ideas are commodities. Execution is not. Okay. And Javesh got a 3-part question. Hi, Chris. Big fan. Thank you. I'm planning to invest $3,000 in growth stocks, and then you list a number of tickers. $100 into each daily over 6 days while the market dips using dollar cost averaging. I've been investing in index funds and ETFs, but this is growth play. Would love your thoughts or suggestions on a better approach. Yeah. So what I would say is this. After you've done your investment research using my templates or any templates you want, and don't ever rely on Jim Cramer or any financial pundit or me, or anybody on television tell you what to buy. After you've done your investment research, then you're going to start putting on the position. You never buy it all at once, right? You start in small increments, maybe 50 basis points a day until it becomes a 5% maximum capital size position. Yeah, but I think with volatility, now is a great time to be buying. What I would do is I would not put in market orders. I put in limit orders, way below where the price is right now to see if you get filled, right? And make it GTC, good till completed. That's what I recommend. Yeah. Make sure you do your investment research. If you don't have time to do investment research, then just do ETFs. Yeah. Nothing wrong with dollar cost averaging. Yeah. Okay. Hey, Kuban. Okay. Next question. Do you have a community page for discussion outside office hours? And how can we tell when a dip is bottom? Any tools or charts you recommend? Yeah. So I answered that earlier on in the call today. Happy to revisit if you want to. I have a Discord channel that's just for my students. If you're interested in joining my program, you can click here or just go to the description of this video, set up a call with one of my employees. Yeah, thanks. And I also have a 3-day event, in-person event for all of my clients, silver, gold, platinum, all my MBA students ever. It's going to be this fall, September 27, 28, 29 here in the Bay Area. It's going to be a graduation ceremony and a networking ceremony. You have to graduate to attend. And then we're going to go to Napa together as well. And if you're interested in attending that event, please email, and you're a customer, email support@harounventures.com. Thank you. Okay, next up, Robert wrote, "Hey, Chris, it's Robert, the violinist. Nice. I played the Suzuki methodology when I was a kid. Yeah. My mom forced me to. Yeah. And then you wrote, I love you, Mom, if you're watching. She's probably not. You wrote, I remember your words well. Do not sell when everyone is selling, and I'm holding. My economics professor sees a recession coming in the fall. Anything I can do?" Yeah. So first thing I want to say about economists in general is, and I'm going to butcher this quote, economists have successfully predicted 76 of the past 3 recessions. Yeah. I don't know. Goldman Sachs is saying 40%, 50% is what JP Morgan is saying. We could have a recession. I just don't know what Trump is going to do. I have no idea. Yeah. But if we do get a recession, just keep thinking longer term. Okay. There's a lot of stocks that you've bought, I've bought, we've all bought. And the charts look like this over time. It really doesn't matter. And you can't time the market. Just be long-term focused. Focus on the destination, not the path. You'll sleep better at night too. Okay. Next question is, Peter wrote, you say when the VIX is 70, you back up the truck. Where'd you have your investments before then that you liquidated to do that? No, I don't liquidate. I hold long-term unless something hits a target price. And then I have excess cash, right? And then I have businesses that make money, and then I deploy capital. Yeah. And what you can always do if you don't have excess cash is you can sell your lower risk investments like United States Treasuries, for example, and deploy them into your favorite growth stocks. But think long-term and create your own investment financial model first per the templates I showed you earlier today, please. Yeah. All right. Next question from Jazzy, who wrote, hey, Chris, how do you suggest us to practice presentation skills and public speaking skills and storytelling? Yeah, a couple things you can do. Number one, you can join mastermind groups. Okay, you can join something called Toastmaster for free. Doesn't matter where you are in the world, you can do it in person or online. I'm going to show you. This is free, and I recommend everybody do this. Okay, so it's called meetup.com, I think. Okay, here it is here. So you search for events. And so what you want to do is search for Toastmasters, which is presentation stuff. And I'll pick a random location. Saudi Arabia. Let's go to Riyadh, big city. And you do a search here, okay? And there's tons of them that you can join, okay? Click on them. You can go in person. I actually think it pulled up San Mateo, but if you try it again, type any city, it will work. This is where I live. You can go in person, it's free, or you can do it online. Now, what I recommend when it comes to public speaking is to do what I did and what Mr. Buffett did. So when I was 19, and when Warren Buffett was 19 as well, we both took, I'm younger than him, we both took the Dale Carnegie public speaking course. Now, Dale Carnegie, this course will change your life. It's in person. They throw you in the deep end of the pool, and I say it with love in my heart, to teach you how to present. So do a search on the Dale Carnegie public speaking course. Do it in person if you can, please. Now, Warren Buffett also has one other thing in common with me, which is he's also a graduate of Columbia University Master's Program, where I did my MBA there 8 million years ago. But on his wall, he does not have his degree from Columbia. He has his certificate of completion from the Dale Carnegie public speaking course. And the reason why Buffett is so successful, one of the many reasons why he's successful, and the same thing with Cathie Wood, is because they know how to present. And if you can take a complicated topic and make it easy to understand, you can make a fortune. And that's what Warren Buffett does. He goes on television, he speaks in a grandfatherly, gentle way, and explains things in simple terms. Learn to master and love public speaking, and I promise you'll take your career to the next level. Now, as part of my MBA degree program, which you can learn more about in the description of this video, I teach you how to public speak better than anybody you know. Yeah. All right. And I can give you individual tips right now in public speaking if you want me to. Yeah. All right, I got to go there. All right, the number one tip for not just public speaking, but to really live your life in your own terms is this. This chart is going to change your life, or chat, as they call it in South Boston. This axis is your age. This axis is give a damn. When you're younger, you're down here, right? Like my kids, you don't really care what people think, right? You have meltdowns in restaurants, whatever. You don't care. When you're older, you don't really care what people think. Like older people don't have confidence problems. The issue is right here. When you're a teenager, 20s, 30s, 40s, 50s, sometimes you're up here. You care what people think. That's a disgusting way to live your life. I want you to avoid this triangle of despair at all costs. I want you to tell yourself, I don't give a damn what people think of me. I'm not saying be rude or disingenuous, but the best entrepreneurs in the world, be it Oprah Winfrey, Bill Gates, etc., they live at this level right here. They don't care what people think. And so before your next speech and before your next interview, I want you to tell yourself, I don't care. And your homework is this. Everybody get a piece of paper and a pen, please. Your homework is this. And if you meet me in real life at my 3-day graduation ceremony this fall, I'm a tiny, tiny man with awful dad humor, sorry. Your homework is this. I want you to write this down 10 times. I don't care what people think of X. Do that 10 times. Fill in the blanks. I don't care that people find out that I love video games. And when GTA 6 comes out this fall, I ain't doing this weekly webcast for a month. I just don't care. I don't care, if people criticize me because of the size of my massive nose. It's very aerodynamic. And when I put on this powder stuff, I run out of it every day because this thing is so big. Maybe I'm beautiful. Maybe it's Maybelline. Please tell me somebody got that joke. So rinse, lather, repeat. Do that 10 times. Okay. And that will help you with your presentation and all aspects of life as well. Yeah. Your friends and family love you for who you are. And when you're up there presenting and, I don't know, you make a mistake, people love you even more. You ever notice that? Somebody's up there presenting, they make a mistake. You're like, oh my God, this dude is human. I love this person. So be you. You do you. You be you. Be yourself. Because as Dr. Seuss said, who I love, those who mind don't matter, and those who matter don't mind. Yeah. And someone else's impression of you does not have to become your reality. Great quote by Les Brown. Yeah. Okay. Next, hey, Michael, how are you? Good to see you. Manas, how are you from Calcutta? Manas wrote, good morning, my dear mentor, Chris, please. Hope all is well. Welcome back. And let's go, please keep doing this. Even if it's 2,125, I'll still be here. I promise you. There's many people in this call that are going to live. I promise you to 150. Yeah. And the average life expectancy today is 26 years longer than it was in the 1950s. So whatever your age is, it's 26 years left. So I'm a 53-year-old man child, but I'm actually 27 with the maturity of a 7-year-old. Okay. All right. So the question is, how fair is it to slam 125% tariff on China and exempt Canada and Mexico from tariffs? Also, where do you see Apple and Tesla by 2028? Well, it's really interesting with Tesla. You'll notice that Elon Musk never criticizes China because that's a huge market for him, for Tesla. Huge market. Interesting, isn't it? In fact, he's more likely to say negative things about our government trade policies, which he's done, calling certain government officials moronic in the past couple of days. Yeah. So anyway, I don't know. So if Elon is not involved in Tesla, I don't invest. Now, whenever a founder of a company, he essentially is the founder of Tesla. I know it's debatable, but he is. But whenever a founder of a company takes their eye off the ball to focus on a pet project, be it buying a sports team or be it doing something else, investors hate it. And I used to short stocks whenever the founder would take their eye off the ball. And this has happened twice, and it'll happen again. So with Elon Musk, when he started looking into buying Twitter, it's called X now, Tesla execution went down the tubes, and so did the stock. The exact same thing happened when he started looking at Doge. Okay, he started taking over Doge, and my gut is within 2 or 3 months, he will no longer be the head of Doge. So if he is not 100% all in on his companies, meaning Tesla, SpaceX, etc., I'm not an investor. Yeah. Now, in terms of Apple in 5 years, I think they'll be more relevant, but I don't think there's going to be toward growth ever again for them. And the reason I say that is because whenever a founder leaves a company, what happens is innovation dies. And I usually don't invest in companies when the founder leaves, especially a tech company. So since Mr. Jobs passed away, what has Apple done that's innovative? Not much. They made a bigger iPhone, smaller iPhone, bigger iPad, smaller iPad. They have new generations of Apple TV, which was pioneered actually by Steve Jobs when he was alive. They came out with Apple Watch, which Jobs was kind of working on before he passed away. And they came out with the Vision Pro, which is a disaster. Innovation dies. I personally don't invest in companies where the founder is no longer running it. Yeah. Because bureaucracy sets in. And what happens is when a founder leaves a company, don't ever invest in a tech company when the founder leaves. But when the founder leaves, what happens is risk-taking stops and innovation stops. And the reason it does is because of this. The founder of a company can be very long-term focused. The board loves them. Investors love them. What is that company? That company is the founder. So the founder is long-term focused. Quite often they don't get on the earnings calls. They don't care. They're long-term focused, right? The longer the view, the wiser the intention. Like Bill Gates hardly ever got on the earnings calls for Microsoft. And same thing with Steve Jobs. Now, when the founder leaves, what happens is every other executive is a slave to Wall Street earnings. They're 1 quarter away from getting fired. So they're not going to innovate. Because if they innovate and they fail, they're done. They're no longer climbing the corporate ladder. So the biggest risk for them is taking a risk. All right, next question is, Yeswanth wrote, how are asset managements different from hedge funds, PE and investment banks? What is the emphasis of the person who is working in the AUM, that means assets under management industry? Yeah. So asset management is an umbrella for managing money. Okay. So underneath the asset management umbrella, you've got hedge funds, which are like mutual funds, except they can go short, bet against stocks. Okay. You've got venture capital firms that invest in private companies that hopefully will go public one day. You got private equity firms that invest in undervalued public or private companies with the intent of selling them for more money or taking them public later at a higher valuation. Okay. And then you've got investment banks. And what investment bankers do is they underwrite IPOs. Okay. And there's other asset management divisions, components as well. There's derivatives, which means options, futures, swaps, etc. And there's also private wealth management. There's real estate investing. There's bonds, etc. Management of money. That's basically what it means. Yeah. Okay. Next question is, what do you think about swing trading? It's better than day trading, I'll say that. So swing trading, if you have a 3 to 6 month time horizon, can work, but I don't say it very enthusiastically. I really think that long-term investing works way, 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 way better. Yeah. Okay. All right, next up, how do you value AI companies with no revenue or earnings? And so the way you value companies that don't have any financials yet is early on venture capitalists, what I used to do is I would first of all bet on the management team first. And I know their business model is going to change. And whatever financials the management team provides me with, I cut them in half because they're not being unethical. They're just too optimistic, as all great entrepreneurs are. Then what I do is I forecast what I think the income statement, the financials in general, are going to look like in 5 or 10 years. Then I value the company based on an earnings multiple basis in the long run, like a PE multiple, and a price to revenue as well. Right there, price to revenue. Yeah, price to revenue basis as well in the very, very long run. Another back of the envelope way to do it is to also look at the total addressable market and calculate what percent of the total addressable market that underlying company you're looking to invest in that's private will capture in the long run. So I'll give you an example. So Kleiner Perkins, a great venture capital firm I partnered with in the past, they usually don't invest in companies that aren't in a total addressable market under $20 billion. So they want a minimum total addressable market of $20 billion, which means the revenue for all companies in that sector in a given year. And the reason is because in the unlikely event that the company they invest in gets 5% share of a $20 billion total addressable market, that means $1 billion in annual revenue. Yeah. Always look at the TAM. Okay. Next question is, how will China survive with 125% tariffs? Also, how will the U.S. handle 84% reciprocal tariffs imposed by China? Yeah. So this is all negotiation tactic on both sides, right? I don't think that Trump knew that China would be this tough to negotiate with. But it's mutual destruction. So I think at some point, I don't know when, but at some point, They will meet and they will discuss getting rid of a lot of tariffs. Yeah. But at this point, it doesn't matter if it's 125% or 1,000%. And the reason I say that is because with those levels, trade between the United States and China is going to grind to a halt. Yeah. Okay, next question is from Jim Culture. Hey, Chris. I learned I did not pass the CFA by coming up one question short. Sorry to hear that. Yeah. Do you have any tips to mentally refocus and begin working towards your goals again? Yeah, please don't worry about that, man. For those of you not familiar with the CFA, it's a Certified Financial Analyst designation. It's better than an MBA. It took you 3 years to get. You write 3 tests. A lot of people fail level 2. I've failed over and over again in my life, and that's why I succeed. You only have to be right in business one time. Everybody you know that's successful has failed more times than you and I have combined. J.K. Rowling got rejected by dozens of publishers. She hated her life. She was God bless her, she was a single parent. She worked as an assistant, but she didn't give up. You only have to be right one time business. Same thing with C.S. Lewis, John Grisham, Agatha Christie, etc. You only have to be right one time. And failure is not shameful, dude. It's a badge of honor. And you got to tell yourself, I don't give a damn what people think of me if I fail, because their opinion of me is not my reality. Again, a great quote by Les Brown. Okay, Manas wrote, why did you say that Amazon was trading at 3 times earnings when your pals called it a widowmaker? Yeah, I probably said that a couple of years ago on this call. I know you've been with me for years. I think this is week 312. So what I was referring to is this. When I worked in the hedge fund industry, I was long Amazon, meaning I owned it. And a lot of people said to me, Chris, you're crazy. It's a widowmaker owning that stock because it trades at well over 100 times earnings. And I said, no. I said it trades at 3 times my earnings estimates in 10 years. You have to think long-term always. The smartest investors do that. I'm not the smartest investor, but you get the idea. Yeah. I don't know the path, but I know the destination. Okay, Reggie wrote, this is fascinating. Thank you. Okay, moving on to Arda, who wrote, hey, Chris, just want to say hi. I'm a listener. Thank you for being with us. Appreciate it. Yeah, and we're actually syndicated across all major podcast networks, Spotify, etc. If people want to listen that way as well. Yeah. Okay. All right. Now, next up, Sanjay wrote, hey, Chris, how are you? I'm always great. Thanks. You wrote, I haven't seen Billions yet. I'm waiting to watch at my own pace. I know Bobby Axelrod is likely based on Steve Cohen. That's right. Yeah. Many people in that show are based on real people in real life, including government officials. I can go there if you want me to. Yeah. Or you can go to my YouTube channel and watch my Billions videos. Yeah. And I just got 1 million views on my first video ever last week, which is kind of fun. Yeah. Hats off to Jean-Marc Lubiana, my editor. All right. Is Taylor based on anyone real? Actually, I'm not sure about Taylor, if Taylor is, potentially. Or have you seen real life people like them keeping this? Okay. All right, next up, is the VIX going to go up for the 90-day ceasefire, giving time for people to prepare? Yeah, so if good news comes out, the VIX will go down, meaning fear will go down. What is going to cause the VIX to go up? I don't know. It might be something China says. It might be geopolitical uncertainty about certain islands off the mainland where ships could encircle. I don't want to go there. Yeah. I pray for peace always. Okay. And then George wrote, Chris, I apologize for yes. Oh, for our 101. Yeah. Let me know where you and your wife are having dinner. I will be there. Thank you. God bless you. God bless you. Yeah. Yeah. And I hope you come out as well this fall, brother. It'd be great to meet you in person. Yeah. And I want to show the movie you made, the video clip to my students, the Mars one, when you have time. Don't worry about yesterday. It's all good. Yeah. And then what you can do is book another one, or you can join me at 10 a.m. today in 45 minutes for the 3-hour weekly Zoom call for my customers. Thanks. Okay, and you wrote we're scheduled for Monday. Awesome, cool. Looking forward to it. All right. Manos wrote, I just checked the Dow and the S&P are down 3% again, even after tariffs halt. Why so was the news priced in? Also, will Japan sell treasury and bond markets to react back? Yeah. So I don't know what Japan is going to do. But as I mentioned at the beginning of today's call, Japan is the largest owner of U.S. debt. The United States has $36 trillion in debt. $1 trillion of it is owned by Japan, which is 2.8%. So if Japan were to sell more debt, that would be scary because that would make prices go down for bonds and yields go up, which I explained earlier today. I don't know what's going to happen. In terms of the market being down 3% today, I mean, it was up. NASDAQ was up 12% yesterday. Yeah. There's still a lot of fear out there. Yeah. Okay. Tom wrote, hello from Kazakhstan. Excellent. God bless you. Welcome to the call. Thank you for the flags as well. Appreciate it. Okay. Moving on to Reggie, whose question is, I earn in dollars, but I live in Brazil. Yeah. And I'm working remotely. It's up around 5.8 to 1 right now, the exchange rate. Yeah. My rent's really cheap, but I'm thinking about using surplus to buy investment properties in the United States. Yeah. I think real estate is the best investment you can make. Yeah. Investment. And if you want to learn about investment properties in more detail, right? And it's always my humble goal for my students to make more money from real estate investments in 10 to 15 years than they do for their base salary right now. But you can take my complete real estate course, which is only available on my MBA program. See the link in the description of this video. But the great thing about investment real estate properties is you get massive tax write-offs. Massive tax write-offs. Try to shy away from just buying land, though, because if you buy land, you can't depreciate it. You can only depreciate the asset on the land, like a house, for example. Okay, Anurag wrote, hey, Chris, hope you're well, likewise. Do you think the best time for equities, meaning stocks, is over the vulnerability around Trump using tariffs and other geopolitical events? Yeah, always the best time to buy stocks is whenever there's uncertainty. Think about it this way. If times are really good and everybody loves a certain stock and everybody owns it, there's not that many incremental investors to buy it and push it higher. If you're a contrarian, your net worth will take off. Just always be a contrarian and think long term. Yeah, think long term. Yeah. I hope that the VIX hits 70 because that's going to be a buying opportunity for me. Yeah. Okay. Question from TJ is, what do you think about the investment bank Natixis? I'm so sorry, I've never heard of it. Yeah. Okay, but if you want to understand if investment bank is credible or not, just take a look at S1 documents. This is the IPO of Facebook to see if Natixis is on the syndicate, like Goldman Sachs, Morgan Stanley is, et cetera, on any big deals. Yeah. Okay. Next question is, the VIX was up to 60, yeah, on Monday morning at the open, yeah, last 2 days ago. So is it time to pull up the sleeves and start researching, or will 2025 be a painful year again like 2022? 2022 wasn't that bad. And do you think, yeah. So I don't really care about what stocks do in the near term. I care about the earnings estimates that you create in your financial model, as I taught you in the Silver MBA program, in 5 or 10 years. You value companies that way. Yeah, always think long term. Yeah. Okay, Matt wrote, hey Chris, hey. And my son's name is Matt. What are your thoughts on the yen carry trade and the potential impact of its unwinding? Yeah. So for those who are not familiar with the yen carry trade, so for many years, so the Japanese economy hasn't really grown. It's very sad because the population of Japan right now is 130 million. And it's actually going to go down to 80 million in a couple of decades. It's tragic. And the Japanese government has tried everything since 1990 when the Nikkei peaked, and it recently reached the same high recently. They've tried everything to try to grow the economy, and they can't. They cut rates to almost zero for a long time. And so what a lot of astute investors were doing was they were borrowing in yen because rates are very low and investing in the U.S. markets. That's called the yen carry trade. Borrowing in yen and investing in the U.S. markets. That trade really unwound last August when the Japanese government, the Minister of Finance there, unexpectedly raised rates. And a lot of hedge funds went belly up when that happened. And a lot of day traders lost their shirts when that happened. Yeah. So I think that trade is over. I do. Yeah. Yeah, and in terms of the impacts of the unwinding of it, it could cause significant sell-off, not as significant as we saw last August, but it could cause a significant sell-off in U.S. markets if it were to occur again. But I don't think it's going to be nearly as bad as it was last August. But Japan, that being said, is the largest owner of U.S. debt. They own 2.8% of United States debt, meaning $1 trillion out of $36 trillion of debt. Yeah, and if they keep selling bonds, again, that's going to drive bond prices down and interest rates up, which is going to hurt everybody. Yeah. Yeah, and the issue with China is that China is so long-term focused, right? So they're being stubborn with respect to negotiating with Trump. I understand. I get it. But because they're so long-term focused, I don't know if an amazing deal is going to get done in the near term between the United States and China. I hope so. They say Chinese communists are the best capitalists. Yeah. Okay, Manos wrote a personal question. Sure. Should one date? After being a bit established, like a good job, money, or a house. Yeah. No. Okay, yeah. So please, whatever you do, don't put your life on hold, right? Like one of I want you to smell the roses along the way. A lot of people think, I want to make a fortune, then I'll get married and have kids. No, what's the point of life, man? We're here to be happy, have kids. God wants you to be happy every single day. The worst is people that say, I just want to work so I can enjoy the last 10 years of my life when they retire. What a brutal existence. Start your family now. A lot of people do it. You'll figure it out. Yeah. Don't defer happiness. I want you to pull forward happiness to today. Be happy every day. What's the point? What are we here for? I say with love in my heart as always. Yeah. Okay. All right, give me 1 second. All right. Next question is, will Trump fire Powell because he is being too stubborn? Federal Reserve Chairman. With rates, inflation will never go to 10%, 2%. It's kind of a separate entity from the U.S. government, the Federal Reserve. I don't think that will happen. Trump bullying other politicians or government officials is nothing new. Yeah. And then you wrote... Okay, will he fire Powell because he is too stubborn now with rates, inflation never go to 2%? Yeah, inflation is getting better. It was actually a little bit better than expected. The latest inflation numbers this week at, close to 2.5% per year. It's getting better. Yeah. All right, next question is, why is Trump planning to replace the dollar with stablecoin? Also, he is selling gold from Fort Knox to buy Bitcoin. What are your thoughts? Yeah. I don't really think he'll do that in the near term. So the way it works usually is monopolies are lazy. They don't have to innovate. The United States dollar looks and acts the same today. This is exactly what it looked like in 1934. There's no point in innovating. I think what will happen, the United States government has partnered with MIT to do an analysis on adding more secure features to U.S. dollar. I think eventually what they'll do is there will be some kind of U.S. dollar that is crypto related, meaning it has more secure measures to it. But if it ain't broke, why fix it? Yeah, I don't see that happening in the near term. Yeah, and with respect to gold, so United States dollar used to be based on gold, and then President Nixon in 1972, remember him? I'm not a criminal. He took the United States dollar off the gold standard. Right. So the United States dollar and United States debt, etc. The United States is the last company on the planet to go bankrupt. There is a massive crisis of confidence, though, right now with Trump, but that will last 3.5 years. Yeah. Because there are 2-term limits. Okay. I'm not going there if anybody has a follow-up question about that. All right, next up, Cy wrote, that's my godson's name too. I hold years, who I love. I hold years of experience in consulting and sales. I'm interested in finance, and I've got your course from Udemy that gave me confidence that I can do this. Awesome. Can you recommend, by the way, an MSc in finance or an MBA? Yeah, so let me answer that. Thank you. Let me answer this generically for everybody out there considering getting a master's degree in anything. Why do you want to get a master's? It's probably because you want to get a better job. Well, before you think about, wasting $100,000 on a traditional MBA and 2 years of your life, what I want you to do is this. I want you to try to make that career change or get that job without the degree. How do you do that? You can sign up for one of my programs. See the link in the description. Make your LinkedIn profile amazing. Set up 100 informational meetings. And my success rate on getting informational meetings with people I've never met before has always been 95%. I don't say it to impress you. I say it to impress upon the fact you can do it too. Set up 100 informational meetings with people that work in industries you want to work in, meaning the reason you want to get that degree. And if you still can't break into that industry after 100 networking meetings, then consider getting the MBA or Master's in Science or whatever it is. And so if a traditional MBA, old school MBA that teach you theoretical crap and nothing else, if a traditional MBA costs you $100,000, then I want you to think of each of those 100 meetings as saving you $1,000. Do those 100 meetings. And you can sign up for my program if you want to. I have non-MBA programs too. We have a lot of programs as well. And I can certainly help you get the job of your dreams. I've had students in my program that have gotten jobs at Goldman Sachs and investment banking in New York City. I've had students that have gotten jobs at hedge funds, private equity firms, venture capital firms, etc. You don't need an MBA. You just have to know how to sell yourself. And I'll teach you how in my program. Yeah. Okay. Next up, Manas wrote, what if Trump never leaves office ever? Okay, the Trump family, it's going to be the best Netflix miniseries ever. Yeah. And they just renewed Adolescence for season 2, by the way, on Netflix. What if Trump never leaves office ever? If he wants, I think I have more confidence in the American political system. There's enough checks and balances in place that there are term limits, and term limits is a good thing. And one of the things I criticize about the Canadian and British political system, especially Canada, is, and I'm very proud Canadian, is that there are no term limits. So when I was a kid, Pierre Elliott Trudeau was prime minister for 8 million years, way too long. I like term limits. If you don't have term limits, it's not a democracy. Yeah. And I do believe in the American system. Yeah. But nothing surprises me anymore. Yeah. All right. Okay. Chippy K wrote, hey, Chris, welcome back. Great to see you. All right, next up. Also, now, how fair is it for one man to pump and dump markets by $10 trillion with a tweet on his own platform? Yeah. Also, did you know that Bissett was the right-hand man of Soros, responsible for breaking the bank? Yeah, I know that well. Yeah. Yeah. So what you're referring to is Trump on his platform, his social media platform called Truth Social. And everybody on Wall Street subscribes to it because it's the only way to really find out what Trump is thinking. So what Trump did before the markets spiked yesterday, he posted a couple of Truth Socials or tweets on his platform saying, hey, everybody, don't panic, don't panic. And he kind of implied that maybe something is coming, right? And then what he did was he put a pause on tariffs for certain countries for 90 days, and the market exploded to the upside. In terms of implications, I don't know. I don't think that's categorized as insider information, whatnot, or market manipulation. Yeah. In terms of Bissett, the Treasury Secretary, being the right-hand man of Soros. Yeah. So George Soros, and I've had mentors of mine that worked for him, were portfolio managers for him. Soros was not a good stock picker, but he was very good at economic stuff, like breaking the Bank of England and causing the Thai baht to go from fixed to floating, where he made $1 billion in one day in Thailand and $1 billion in one day with the Bank of England. And I think Bissett actually is a decent choice to be Treasury Secretary because I think he understands economics much better than most Treasury Secretaries. Yeah, probably understands it more so than anybody since Robert Rubin. Yeah, who used to be the CEO of Goldman when I worked there years ago. Yeah. All right. Okay. And then Chippy K wrote, Chris, where do you get the news from? Very simple. All I do is every morning when I'm showering, I say, Alexa, Wall Street Journal news. That's it.
From the Wall Street Journal.
That's all I do. Yeah.
Business taxes.
Oh my God. Alexa, stop. Yeah. And I'm so sorry if I made ALEXA go off on your unit and other units out there. One day I was at a conference, and it's when I left the hedge fund industry and I worked in venture capital. I was on a panel, and it was a hedge fund conference, right? All the top hedge funds were there. And there was a couple of pricks in the audience that were kind of asking mean questions to me, right? You know, very, very abrasive. And it drove me crazy, right? And I don't care what people think of me. So I said this. I said, SIRI, set an alarm for 3 a.m. that repeats every day. And at that point in time, anybody's voice would work. And so all these PMs and jerk analysts were like, yeah, all right, too much information. Hi, I'm 7.5. Moving on to Manas, who wrote, I was doing research on Ukraine, and I found interest rates are 15% there. Also in 2022, they were 25%. Why so? And also, is it a good plan to buy their debt because 15% is pretty cool? I personally don't invest in countries that are not very, very secure. Yeah, so I'm gonna say it's not for me. I'll take a pass on that. Yeah. And what Russia did actually is they raised interest rates to a commensurate amount for a while as well. Yeah. All right. And you wrote also a lot of European countries like Georgia or Romania and many more have very high interest rates. Why so? And also very high inflation rates. Why so? Yeah. I don't know for those specific countries. I'm sorry. Yeah. I would go to ChatGPT and say, so I would understand, explain why Romania has high interest rates to a child and be brief so that I would understand, me being the child. Okay, Vital, oh my God, I love you, man. Vital, it's so good to see you. Oh my God. Vital wrote, hi, my friend Chris, nice to see you. Just passed by shortly, say hello, blessing. Oh, I love Vital. So the first school we built was in Rwanda, and it's Vital's school. And I'll show it to you. We're building one now in Kenya. Here's the one in Kenya. But this here is Vital. And so he's from, and the reason I do what I do, right? I have a purpose is I want to build 1,000 schools in Africa by the time I die. And that's Vital right there. That's the school we built in his hometown. He was one of my former MBA students years ago. We built it right there. There's solar on the roof as well. Here's what it looks like on the inside. I did my weekly webcast from there in 2023 when we completed the school as well. So you can fit over 100 students in the school as well. These kids were adorable and they inspired the heck out of me as well. And then up on the roof, we've got solar. There's Vital climbing up here. And then I taught my classes there. We gave all of our students there degrees and all that stuff. And then we got water as well. And that's me getting water. Dude, I was so tired. I don't know how the kids do it. They were walking in bare feet. I had shoes on. I was exhausted. Yeah. So, and that's my son Matthew there dancing. And then here we cut the ribbon. That's one of the ministers of education. That's Vital's beautiful sister right there, who's great. Yeah, but Vital, I love you, brother. It's so good to see you. If anybody wants to donate to Vital, please email this address you see right here on the screen, nvip2020@yahoo.fr. Thank you. Great to see you, buddy. Hope you're doing well. I miss you. Okay. Moving on to Mallory. Mallory's one of my platinum students from England. She's got an incredible channel on Instagram as well, where she actually she teaches you how to cook. You know that there's that awesome dude who says, "Don't." I'm going to swear here, earmuffs. He says, "Don't fuck it up." She does it like that as well. She has a lot in common with that guy in a nice way. So Mallory, I want to show you this, and later on during our office hours, if you want, I'm going to show you this brand new product. Now, for those of you that want to vlog, I recommend getting this product here. I'm going to give you the link right now. I've tried every DJI Osmo product there is. They suck compared to this one. You put this on the back of your unit here, okay? Then what you do is you slap this in right here. It's fun doing these things live. Okay, good. Excellent. Okay. Then this thing here, it can be a selfie stick. It's got a tripod that comes out here as well. Let me turn it on here and show you how this works. Okay, great. So what you do is you can vlog like when you're walking outdoors, and there's a teleprompter on here. So when you guys see my Instas and it looks like, oh my God, Chris, how's he doing? How's he walking and talking? He's so smart. He's dumb. because I read off a teleprompter. And what you can also do is you can turn the screen this way, right? So if you want, Mallory, what I'll do is I'll show this to you as well. And the great thing about this product here, I'm not sponsored by anybody, never will be, is there's a light as well. So you at least get some light in your face while you're walking. Now, let me show you where to get this. I don't have any affiliate on this, but if you guys want to vlog, I highly recommend getting this. Let me turn it off. Okay, so I'm going to show this to you right now. All right, so it is a gimbal. Let me go here to Amazon. All right. And for those of you on Spotify or listening to the podcast, what I'm doing is I'm showing the name of this gimbal that works. Okay, I guess I'll type in the word gimbal. Gimbal. Here it is here. Yeah, I bought every Osmo over the years. They all suck compared to this one. So the one I recommend getting, I would buy this. Oh, the great thing, Mallory, as well, for your cooking vlogs, which are awesome, and I want you to share them with us so I can show people as well. If you want, share the link right now or just email it to me. The great thing about this also is when you turn it on, it's got follow feature. So it'll follow your face. So you can set this up as well, and it will follow you as you walk around and do your cooking. So it's called here the Insta360 Flow 2. Take a screen print here. I want you to buy the highest end version because it comes with a light as well. Okay, there it is there. So for those of you on Spotify, it's called Insta360 Flow 2 Pro Creator Bundle. And I don't have any affiliates. I had one earlier, which I canceled. I don't need affiliates. Otherwise, I'd be biased and not teach you guys stuff the right way. Okay. So Mallory wrote, hey, Chris, is that for my group too, meaning the 3-day graduation? Yeah, you can come as well. Obviously, all MBA students, silver, everybody can come to the 3-day event. It's not just a graduation event. It's a networking event as well, and you're going to love it. September 27, 2029. Today, in about 45 or 25 minutes, ask me on our weekly 3-hour Zoom call. I'll provide all the details. Yeah, and I hope you come. And for those of you in my MBA degree program, anybody from England or Europe in general, Mallory is trying to get a lot of people together to go to the Tony Robbins Unleash the Power Within event in Germany. She's trying to get a group discount. So if anybody else is interested today on the 3-hour Zoom call, let Mallory know. Yeah. And then Mallory wrote, I made the t-shirts and a couple of videos since I last saw you. Is it better to wait for next session? No, show me in 20 minutes, 25 minutes. I want you to show me on Zoom so we can go through it together. I'm happy to edit your videos for you as well in Final Cut Pro if you want to. And I'll talk about this in more detail. And the t-shirts are for those of you not familiar with it, it says saying, don't F it up. It says don't muck it up or something. It's going to be huge. Yeah. Okay, Eileen, how are you? I miss you. Eileen Deo Gracias. She is one of my earlier students from last decade, my MBA program. Her last name is the best last name in the world. It's Deo Gracias, which is Spanish for thank God. Yeah, she lives in Atlanta. That's where I got this from when I visited the Coca-Cola factory, and I visited her as well, and she gave me this gift as well. Thank you. Great to see you. So Eileen wrote, hey, Chris, I logged in too late. Hope things are good. Thanks for agreeing to meet with my friend Maria. You're most welcome. I'm more than happy to give her all the advice I possibly can on building that school she wants to build. Thank you. Okay. And then Manos wrote, yeah, Tesla has the biggest gigafactory in China. Yeah, and that's why, of course, Elon never says anything negative about China. But since he's so right-wing, of course, he doesn't like communism, but he's never said anything negative. Okay. Sean, how are you? Sean is in my gold program, started in January. Great to see you, brother. Sean and his wife, Michelle, are both gold members. Sean wrote, good morning, Professor. Unless NBC News tells me, how would I know if we are in a recession? Is there a signal? Yeah, the definition of recession is exactly this. 2 consecutive quarters of negative GDP growth year over year. GDP being revenue for the economy, sort of. So if you see GDP go down 2 consecutive quarters year over year, that's technically a recession. Yeah. Next question is, you said Vietnam is a good spot, but they have been tariffed to 84% too. Also the Philippines, Malaysia, and all Asia companies have been tariffed at least 20 to 30 years. India, 27%. Yeah. No, I think you're going to see some interest in Vietnam because what's happening is Vietnam is now negotiating with the United States to materially lower tariffs. And as a result, I think what's going to happen is a lot of people have to invest in Asia, right? It's part of their mandate, asset managers. I think you're going to reallocate investments from China or Hong Kong directly to Vietnam. Partially because I think what's going to happen is not only will tariffs go down for Vietnam relative to the United States, but more importantly, I think China is going to find a way, very smart, to sell stuff to the United States through Vietnam, kind of like how China sells certain products, I won't go there, through Mexico to the United States. Yeah. Okay, next question is, you said the United States will never go bankrupt, or at least the last to be bankrupt. On the other hand, you say the dollar can be replaced. No, I don't think it will be replaced. Yeah, no, I don't think the dollar will be replaced. It's all relative. The United States is still, the dollar is still the gold standard at this point. Yeah, yeah. And China is trying to bully the U.S. and vice versa by selling treasuries. So China only owns, they own about 2% of the United States debt, right? So they own $750 billion out of the United States debt of $36 trillion, Japan being the largest owner at $1 trillion, right? And there might have been a coordinated attack of Japan and China partnering together about 36 hours ago in terms of selling U.S. treasuries. And when they sell U.S. treasuries, what happens, as I mentioned earlier, is the value of treasuries goes down, and that makes the interest rate go up. And I can explain that in more detail if you want to. And I think that's why, really the reason that Trump blinked. Yeah. Nobody wins in trade wars. Next question is, you do not need to graduate degree to CFA, just a diploma or something, and 1,000 hours work experience. Your thoughts? I think you need an undergraduate degree to sign up for the CFA, but I could be wrong. Yeah. If anybody knows the answer, let me know. Okay. And then you wrote, how do I get to work with Kathy Wood while she is in New York and her fund is there too, and you're based in India? Yeah. And why liberal arts people do well in finance per your LinkedIn post yesterday. Yeah. So let me clarify that. So if you want to work for an American company and you're overseas, you can always network using the methodologies I explained in the MBA degree program. And if you want today, during our 1 hour or during our office hours, call the Zoom call today in 18 minutes. I know you've been working on your LinkedIn profile. I can continue to help you with it, to teach you how to network, to reach out to people, including Kathy Wood's company. It might be tough, but I'm sure that she does some outsourcing as well. Yeah. Yeah. Okay. In terms of liberal arts, yeah. So what's all right? So I don't want you to misunderstand my LinkedIn post, but so Jensen Huang, who is the brilliant founder and CEO of NVIDIA, he basically said that he thinks the American education system is going to pass the rest of the world in the next decade or two. And the reason he said that, and by the way, he says don't study computer science anymore because AI can do that. In fact, Facebook or Meta has been letting a lot of engineers go that are being replaced with AI. And so AI can replace or augment the role of a developer. It's counterintuitive, I know. But Jensen Huang is saying study liberal arts instead. And the reason he's saying that is because liberal arts allows you to think creatively. Now, in the United States, unlike every other country in the world, when you go to university, for the most part, you study liberal arts and you don't declare a major until maybe your second or third year. So you study liberal arts. Why is that a good thing? Well, according to Jensen Huang, it allows you to think outside the box, so to speak, and be much more creative from a thought process, innovation perspective. And it's no wonder that Steve Jobs used to say that Apple always lives at the intersection of technology and liberal arts. You can think creatively. Now, why is Jensen Huang saying that the United States will pass the rest of the world in 10 or 20 years, or a couple decades, whatever it is, in terms of education quality? Because the United States, again, unlike other countries, forces you, a lot of the time, to study liberal arts first. Yeah. It helps you be more creative as well and speak gooder. Yeah. Okay. And I would only take liberal arts courses. I try to take as many bird courses as I could in university, like art history. And that was the best place to meet women, I remember, when I was younger. Chris, stop talking. Okay. All right. D'Angelo, oh my God, it's so good to see you. So D'Angelo is one of my students, I think from Michigan, and you wanted to work in Hollywood as an actor. And I talked to you 3 years ago, you're in my MBA program, and I said, if you want to work in finance, move to New York. If you want to work in movie industry, move to Hollywood. I'd love to hear what's going on with you. I'm sure you got lots of acting gigs as well. Would love to catch up. And also, you can always join me on the weekly 3-hour office hours call in 15 minutes. Yeah. And if you don't have the Zoom address for it, just email support@harounventures.com and I'll make sure my staff gets back to you right away. So D'Angelo wrote, hey, Chris, thank you for the kind words during the general advice a few weeks ago. Yes. Great to see you. Do you have general advice for those shifting from employee to independent contractor within the same company? Yeah. So number one, what I want you to do is I want you to go to LegalZoom.com. And I want you to get legal advice there to see if you should set up your own LLC, to see if it's tax advantageous. Number two, what I want you to do is I want you to make sure that you have an accountant that does your personal taxes and your business taxes as well, meaning your contracting firm as well. Yeah, that's what I would say. Yeah. And if you want, you can show me your LinkedIn profile during the weekly 3-hour Zoom call. And I'm happy to give you more advice as well. Yeah, it'll be good to talk to you live over Zoom too, if you have time. Next question is, have you been to China? And also, have you worked there? What's the work culture there? Also, if you were 30 again, would you want to work in Russia or China? If I had to pick one, definitely China over Russia, although I don't want to work in China. Yeah, I've been in China a number of times. Yeah, so on my honeymoon, I took a 6-week honeymoon. We went all over Southeast, including Hong Kong and Beijing and all that stuff. And then when I worked at a big hedge fund called Citadel, what I did was they sent me to China as well to meet with a lot of tech companies, video game companies, etc. And so I went to Shanghai to meet with Shanda and the Nine and a bunch of other video game companies that I invested in. And what was fascinating to me was at that point in time, that was in January of 2006. When I went there, I remember meeting with all these incredible companies in Shanghai. And Shanghai, by the way, it's like Blade Runner. It's like if you take New York City, wipe off every building, and build it again in a more efficient and cooler way. That's what Shanghai looks like. It's unbelievable. But when I met with these executives, CEOs, et cetera, of the top video game companies in China, I remember asking them at the time, I said, why is PC gaming so big in China compared to America? And what they told me was fascinating. They said, well, in China for many years, we've had this one child per family policy. And in the United States, after dinner, you go in the backyard, play with your brother and sister, whatever. But in China, because there's a one child, or at least there was, a one child per family policy, the only way to really socialize is online through gaming. Yeah, it's kind of interesting. Yeah. Okay. But I wouldn't invest in Chinese companies or Russian companies just because I don't trust the accounting. I don't. And I remember with respect to Russia years ago, I think it was in 2007, I invested in Lukoil and Gazprom, and I built the financial model. And I was like, oh my God, these companies traded 3 times my earnings estimates in 5 years. But those estimates were a lie because you can't trust the accounting. Okay. And that is not a knock on Russian people. It's just the policy, whatever. I'm not going to go there. All right. Give me 1 second here. All right. I got 12 minutes left. I'm going to try to answer as many questions as I can. If I don't answer them, either ask me next week or join my MBA program or sign up and ask me in the 3-hour Zoom office hours later today. Okay. All right. Next question is, Japan is a fascinating example. They've been stagnant for 40 years. Yeah. Also lesser babies. Yeah. Less population, geopolitical issues. Why are they being hit with 30% tariffs? Yeah. Because Japan makes it almost impossible for the United States to sell products there. Right? So Japan, millions of Japanese cars are bought in the United States. Yeah, a lot of them are manufactured here too. But there's hardly any American cars in Japan. It's just not fair. Yeah. And Trump's been saying that since the 1980s. If you want to do a search on YouTube for Trump Oprah Winfrey interview, and he talks exactly about that. Yeah. Yeah. Okay. Next up, Thomas wrote, Chris, thank you for all the efforts in this call. I love your program, and this is my first live event with you. Thank you so much, Thomas. God bless you. And I love your last name too. That's my favorite comedian. Spelled a bit differently, but yeah. God bless you. Tommy J, great to see you again. Wrote, hey Chris, how would you recommend preparing for an initial phone interview? They want to understand my background, what I'm looking for, what type of role it is, and the company culture. Okay. Yeah. All right. I always rather, hopefully it's a Zoom call. I'd rather you do a Zoom call instead of a phone call. I'm dating myself with this. But in order to prepare, what I would do is I would get the names of the people that are interviewing you. I would then go to their LinkedIn profile if you can. And I want you to see who they follow, if you have any contacts in common with them. I want you to see what their interests are at the bottom of their LinkedIn profile as well. Now, if they follow any politicians, being Democrats, Republicans, don't talk politics ever, okay? And don't include any politicians, please, that you follow on your LinkedIn profile, because half the people won't like you. I don't know what half. I want you to go to the X profile, meaning Twitter profile and Instagram profile, the people you're about to meet with, okay, or do the call with. And I want you to see who they follow, so you have something to talk about when you're bonding before business. Now, bonding before business is a little bit harder on the phone, but you could still do it. I also want you to search the news that day on the company, as well as important events globally, so you can shoot the breeze, so to speak, or be able to talk about stuff, yeah, beforehand in terms of bonding, yeah. Then what I want you to do is I want you to go to glassdoor.com, if it's a bigger company, and I want you to do a search for feedback on working for that company in terms of questions you might be asked in that interview. Then I want you to go directly to ChatGPT, and I want you to do this. Okay, I want you to think of all your weaknesses, okay, your perceived weaknesses, which are strengths, and I'll tell you how. You'll go to ChatGPT and you're going to type exactly this. I have an interview today. I think my biggest weakness is X. In 2 sentences, I want you to turn that weakness into a strength. Hit go, and it will tell you. For example, if your weakness is, I don't know, say you didn't spend enough time at 2 previous companies. Well, it might spin it in a way where it says, well, that wasn't my passion. Or if your weakness is you had a 2.9 GPA, which is respectable still out of 4. And the reason is because you had to work 2 part-time jobs to pay for your family. ChatGPT will spin it in a way that it says that something along the lines of, well, you can multitask. You can do many things at once. You're independent, yada, yada, yada. Rinse, lather, repeat, yeah. Now, obviously, you want to find out more about the company as well. What you can do is this. You can copy the description of the company, okay, from anywhere, and your resume. Then you go into ChatGPT and you can type exactly this. I have an interview with a company. Here's the description of the company. I'm going to paste it now and then wait for my next prompt for the next instructions. Go. ChatGPT will say, thank you. What do you want me to do next? Then you say, now here's my resume. I'm going to paste it. And what I want you to do is I want you to create a table that's got 2 columns. Column 1 is the questions they'll likely ask me based on the profile of the company, the job description of the company if you have it, and my resume. Column 2 is I want you to answer those questions in bullet point format. Now, another thing I want you to do when you prepare, and this is only applicable to those that are doing Zoom calls or doing an in-person meeting, is there's a guy that I interviewed on this webcast a year and a half ago, really good guy. And he founded this company called Udly.ai. You can sign up for free, okay? And what this will do is when you answer questions, when you answer questions, it's going to analyze if you're speaking too quickly, like I do sometimes, or it's also going to analyze if you use too many filler words, like or etc. It'll give you a lot more feedback too in terms of body language, etc. Yeah, so check it out. It's a free resource, great company, Udly.ai. And good luck and enjoy the interview. And right before the interview starts, and my mouse is out of batteries, give me a second. Right before the interview starts, what I want you to do is I want you to tell yourself, I don't care how this goes, okay? I don't care if I get this job. There we go. Give me one second. I don't care if I get this job. And I'll take pressure off you. And the mentality I want you to have before the interview starts is this. I want you to tell yourself this. I'm about to meet with a great aunt or great uncle that I haven't seen in years. They love me for who I am. Have fun. Okay, Manas wrote, Why were you bullied by Steve Ballmer? I probably mentioned that many years ago in a vlog. Okay, I'll tell you exactly what happened. Okay, so Steve Ballmer was the former bully CEO of Microsoft. So every single year I would go to Microsoft's headquarters and I sat beside Bill Gates for lunch and met with him a number of times. Really good guy, by the way. A little bit different when you meet with him one-on-one though, right? And I can explain how. But I was sitting in the front row. There's 500 people in a room, financial analysts from the top hedge funds, mutual funds, whatever, and sell-side firms. And Steve Ballmer was presenting, right? And Bill Gates was sitting down just waiting, and the CFO was as well. Steve Ballmer was presenting. I was sitting front row center, and it was 1:01 p.m. Pacific time. And I had 3 companies reporting at the same time, including Citrix, ticker STXS, Symantec, and one other. So I'm updating my financial model as fast as I can, right, to beat the competition, right? I worked at a hedge fund that covers software, internet stocks. And I'm very quietly doing it, updating my model. Steve Ballmer is presenting. And then all of a sudden, Ballmer stops talking. I'm like, oh my God. And I looked up. And he was staring at me like this. In front of 500 people, Bill Gates, everybody. And I was like, WTF, why the face? And so I stared back at him. It was a staring contest. And I kept staring. And I kept staring. And it felt like forever. And I got scared. I looked down. And he kept staring. And then he continued. Bully. Yeah. Okay. All right, guys. I do have to wrap up this call in a minute or a couple minutes or so. Again, if you guys are in any of my MBA degree programs, you can join the Zoom call. If you don't have the Zoom link, you should. But if you don't have the Zoom link for the weekly 3-hour Zoom call, you can always email support@harounventures.com. And my support staff will get back to you and give you the link. What I want you to do also is if you want to join one of my programs, my career coaching programs, I have tons of programs. I want you to go to the description of this video and set up a call with my team and we can talk about it in more detail. Yeah. Okay. And I've got humbly over 2 million paying students in every country, and I'm scaling the business a lot. I got a bunch of people working with me now and all that stuff. I have to build a lot of schools, man. And if I was a quota-carrying sales rep, I'd be fired so fast because I set my goals and expectations so high. And I've been telling people I want to build 1,000 schools in Africa in my lifetime. And if it's 100 grand per school, 100 grand times 1,000, that's $100 million. I'm going to make it happen, guys. I don't know how, but I will. And as James Cameron, the great Canadian director, writer, producer of Avatar and Titanic said, if you set your goals so high and you fail, you still fail above everyone else's expectations. And whenever I undertake, and this will tell you a little bit about me, it's kind of crazy, but I love risk taking to the extent that whenever I undertake a new challenge in life, I feel like I'm standing on the edge of a cliff. And I throw a bunch of airplane parts off. And I jump. And I have to assemble the airplane before it lands. So anyway, I love big challenges. All right. 3 minutes left. Let me try to bang out as many of these as I can. All right. Give me 1 second. Okay, Nova. Hey, Nova. First time I see you on the call. Hope you join again. A career question. Would it be beneficial to complete level 1 CFA in undergrad? Would that help me in pursuing a career in finance? Also, can you recommend if there's another thing which would help me? Yeah. So CFA is going to take you at least 3 years to do. You have to write one exam in year 1, 2, 3. It's not going to really help you on your resume until you have it, right? You can't say pass level 1. You can if you want. But you can only really put it on your resume if you're a CFA charter holder, as they talk about in the documentation there. Now, if you're going to study for the CFA, please don't buy the textbooks they tell you. It's a waste of money. What I want you to do instead is exactly this. I want you to go to eBay and do a search for Schweizer CFA, and it'll correct your spelling. Corrects mine always. So do a search for Schweizer CFA books. Okay, so Schweizer is a company that's owned by Kaplan, which is owned by the Washington Post, which is owned by Jeff Bezos. Sorry. But Schweizer creates these guidebooks that will help you to read small books to be able to pass CFA. And they give you old exam questions as well. And the books are this big, which you can buy used for $30 or $40 on eBay. Don't buy them brand new. It'll cost you a lot more. Instead of paying $800 for the textbooks that CFA tells you to get. Yeah. But I think it can help. CFA level 1 is basically a repeat of core MBA curriculum for MBA schools. Yeah. But it is prestigious. I like it. and the biggest concentration of CFAs per capita is in Toronto. All right, next up, Adam wrote, hey, Chris, I'm trying to sign up for your MBA course, but I can't schedule initial meeting. Who can I reach out to? Yeah, I'll show you exactly. All right, so go over to, come with me to my website, okay? And then at the very bottom here, you'll see book a meeting. So go to harounmba.com and then click on book a meeting here, and it should schedule a meeting. And if it doesn't work for you, email support at harounventures.com. Okay, see. All right, guys, I'm so sorry. I know there's tons more questions. I do have to wrap this up. If you guys are in my MBA degree programs, we're starting a Zoom call right now, a weekly 3-hour Zoom call for you guys. I do have MBA programs and consulting programs where you get daily calls with me as well. To learn more, go to the description of this video and click on the link to set up a call with one of my staff to learn more. God bless you all. Don't panic with the market. If the VIX crosses 70 in the next week, I will be buying. Do your research first. Think long term. God bless you. And I'm going to end this call with a video that's life-changing. It's very short. It's a Steve Jobs interview that I licensed from the Silicon Valley Historical Association. Please watch this video. God bless you. And for all MBA students, I'll see you in about a minute on our weekly Zoom. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.